Ever get that feeling? Like you walk out of the store with a brand new phone and it's like, boom, instantly worth like $100 less.
Oh, tell me about it.
Right. Now, like, magnify that feeling by like thousands. Because we're talking cars today. Depreciation, that gap between what you owe and what your car's actually worth, it's a real thing. And that's what this whole deep dive on gap insurance is all about.
Makes sense.
Yeah. So we're going to break down exactly what this whole gap thing is, when this insurance can be a lifesaver, and when you might be able to say, nah, I'm good. So first things first, right? Can you walk us through like what this gap situation even is?
Absolutely. You hit the nail on the head. That very moment your new car leaves the dealership, it's already lost some of its value. That, my friend, is depreciation in action. Now, the gap we're talking about, it's that tricky difference between what you still got to pay on your loan or your lease and what the car is actually worth on the market, at this very moment. And here's where it gets a little hairy when you owe more than the car is worth. That's what we can call negative equity.
Okay, yeah, that makes sense. And that's when this gap insurance swoops in to save the day.
Bingo. Think of gap insurance like a safety net, specifically for those situations where your car decides to take an unplanned detour, total in an accident, or, heaven forbid, stolen. And if you're staring down that negative equity beast, well, that's where this insurance steps in. It covers that difference that your regular auto insurance might not, saving you from a financial gut punch when you're already probably stressed out enough as it is.
So, thinking about depreciation and this whole negative equity thing, when would you say gap insurance is like essential? Like what situations scream get this coverage?
You're thinking right along with me. Okay, so picture this. You put down a teeny tiny down payment, right? We're talking like less than 20%. Or maybe you stretched out your loan payments longer than a Monday morning meeting.
Yeah.
Or, hey, maybe you're cruising around at something that screams, look at me, a car that loses value faster than my patience in a traffic jam.
Yeah, okay.
Luxury models, I'm looking at you. And of course, if you're leasing, well, sometimes it's not even an option. They make you get it.
Right, right.
Now, let me just hammer this home with a real-world example because I've seen this way too many times. Let's say you splurge on a shiny new car, 30 grand, right? But you're feeling good, put down a cool 5,000, fast forward a year, and bam, total tragic, right? But here's the kicker. Due to this whole depreciation thing, your once upon a time $30,000 baby is now worth a measly 20 grand. Insurance might cover that market value, but guess what? You still owe 25,000 on the loan. That extra 5 grand, yeah, that's where gap insurance swoops in. Cape and all, save the day.
Man, that's a pretty penny, especially when you're already dealing with, the whole car being totaled thing. But gotta ask, gap insurance. It's not like
Yeah.
a magic wand, right? There's gotta be some stuff it doesn't cover.
You're absolutely right. It's not some magical policy that covers every bump in the road, sadly. The big thing to remember is it's all about the total loss scenario. That means
Yeah.
your insurance company basically says, yeah, that car's seen better days, declares it a total loss, the end. So
Yeah.
let's say your car needs some serious TLC, like a major repair bill that has you sweating, but it's not totaled. Gap insurance is going to sit that one out. And it's definitely not a replacement for your other must-haves like liability coverage or anything that protects you if someone gets hurt.
Right, right.
I had this client once thought their gap insurance was like a get-out-of-jail-free card for a busted engine.
Yeah.
Whew, that was a tough conversation.
Yeah, I bet.
It's a good reminder that this is super specific coverage for a super specific situation.
So it sounds like knowing your situation, like really understanding your own stuff, is super important here.
100%. There's no magical formula, no one-size-fits-all answer. Really think about those loan terms, that down payment you put down, the car you're driving. Is it a notorious depreciator? Because let me tell you, some cars hold their value way better than others. And hey, there are even these cool online tools now that can estimate the depreciation of your specific make and model. Gives you a clearer picture of your potential gap situation. Still unsure? Don't be afraid to tap those resources. Talk to your insurance agent. Maybe even have a chat with your financial advisor. They're like the financial whisperers.
Seriously, never hurts to ask, right? Then here's another thing for our listeners to chew on. As you chip away at that car loan, that gap shrinks, right? Makes sense. And a lot of the experts I've talked to, they say once you hit that 20% equity mark in your car, it might be time to reassess. Could you even save some cash by ditching the gap coverage early? That's a conversation to have with your insurance agent. Figure out the smartest, most cost-effective plan for you.